Nigeria, we polled a couple of companies on the equities outlook for 2011. Wole Famuwera was standing by with the details.
Thanks, Lorato. Well, essentially, it's a poll which we did with some analysts on the ground here, getting a sense of where they think the market will close 2011. And I'll start with the consensus view. Essentially, I think the view is that the equity market should be positive in 2011. It should be the second positive year after 2 years of declines. Indeed, 2010 was the first year we had a positive year since 2007. And the reasons for that are not far-fetched because of the crisis in the banking sector. And of course, there's also the food and beverage sector. There's more or less a consensus there that that sector should outperform the market in 2011. And the main catalyst that most investors are pointing to this year is AMCON and the activities of AMCON. We're beginning to see that already in 2011. For the first 2 weeks of the year, the market was up 10%, and that quickly followed the intervention of AMCON in the banking sector, where it purchased the non-performing loans, particularly of the rescued banks. And then, of course, another catalyst, the risks that investors are looking at this year, obviously, is the elections and politics in general. Nigeria's checkered history with elections is a concern for many investors, and the analysts are of that view as well. And then, of course, there is the oil price and the impact that that would have on government revenues and, of course, the exchange rate. And now looking to some of the more unique views, starting with the top performing sectors. And there is a view that from ARM investment managers where they point to the insurance sector as one that they think should outperform in addition to the banks. They are thinking that the stocks in that sector should rally from a very low base because that sector has underperformed the market over the last 3 years. And they also point to earning surprises that they think we probably would see in 2011, given the fact that many of the insurance companies have had to deal with a lot of pressure from capital market losses with the equity market's poor performance over the last 2 years. And they see the market doing well this year, and they think that we'll see less of that, and that should be positive for the sector as a whole. They also point to the provisions made in the sector as directed by the regulators. That had an impact on the bottom line for insurance for insurance companies in Nigeria last year, and I think that we'll see less of that this year, and that should put that sector in a very positive light. Finally, they also point to a review of investment rules by the Pensions Commission, where pension fund managers should be able to invest in companies that have paid dividends once in the last 5 years, compared to the old rule where it says you can only invest in companies that have paid dividends in three of the last 5 years. And coming to the worst performers, some unique views coming from Chapel Hill Denham, given their thoughts on the cement sector. They have the view that that sector might underperform the market this year, mainly because of the possible impact that Dangote Cement might have on the sector. Dangote Cement obviously represents 23% of the Nigerian capital market, and any movement in that share price obviously has a huge bearing on the sector. And then finally, we move on to the top 5 stocks that many investors are looking at, and there's consensus there that the banking sector should perform very well. Fidelity Bank, Zenith Bank, GT Bank, First Bank are the likes of some of the companies that analysts are pointing to. And some of the unique views include Fidelity Bank, where they think that the capital adequacy ratio at 40% puts that company in a very positive position, and they expect the company should review its valuation over the next year, given its current valuation of 0.6 times book value. Don Lauren Merrifield points to the rescued banks as a sector that as a group of companies that they think would rally in 2011, and they're looking at a speculative rally from a low base, given the speculations regarding M&A for those companies. In addition, Vertical Capital Management point to Oando as a stock that they like. It's a diversified energy business, and they think that it should outperform the market. Also, it should benefit from the passage of the Petroleum Industry Bill, which analysts expect should be passed later this year. And then, of course, FSDH points to UACN and the alliance that company has with Tiger Brands of South Africa as a positive for the company. And they think that it should also outperform. So that's a wrap from Nigeria for now.